Hello everyone, my name is Denis, and in this stream I will talk about humanoid robots, and here you can see a company with ticker 697, Shouchen Holdings, and I hope if I will review the stream in 5 years, this stock will cost significantly more than 1.57 Hong Kong dollars, and now they have market capitalization close to 13 billion dollars. And I think we have to start from the beginning. About this specific company. They own some sort of robotic ecosystem, plus they have investments in over 20 robotic companies, and actually it looks like now they made 4x on their investments, and it is now close to 8 billion. They're holding Unitary, Galbot, Deep Robotics, Noetics, Booster Robotics, and other companies. As a business, they own and operate some parks, car park, and they want to make it close to e-park, where you can charge your automobile. Actually, it is quite interesting. In their group, previously it was an industrial park related to steel with some sort of a production, but in 2008 they closed this production facility, and now it is just a regular park where you can walk and rest, plus some shops, and it is quite huge. Plus they have some other assets under their management, and they are all related to industrial parks. Plus it is a long-term operation lease, like a garage parking close to airports, and they are quite good in it. Then they own several parking stations for like 1 billion CNY, and also they have the specific soft SIPC platform actually to operate parking stations. Now they have over 13 stations near airports, and they just produce a lot of money, like a stable cash flow. Plus they're working on a Taju, and it is some sort of a shop where you can actually buy humanoid robots, and in interior, if you have like over 100 producers in China, and they all making quite similar robots, definitely you will need some guys who actually can connect you with production facility, and maybe they can guide you what actually do you need, because on the first look they are quite the same. Here you can see some names, what actually they own, but they have like a super small amount of stake in these companies. Here you can see how Taju Manufacturing Bureau looks like a regular shop, and they are planning to make like 20 of them all over the China, and you actually will be able to buy robots here, plus maybe some services like repairs. Plus, they are shifting on their parking stations to like a little bit better stations where you can add electricity or charge up your vehicle, and it is interesting. Plus, they have some like leadership in REITs over China. They are controlling some of them. Here you can see that actually they're not just talking about it, they actually use some humanoid robots in their parking buildings, and here you can see a photo from airport. Here you can see some data from report. They actually have this money. It is not a bullshit. Car park buildings, and you have like 1, 2, 3, 4, 5, 5 buildings and over 1 billion Hong Kong dollars in valuation. Here you can see some forecast for 2026. They will probably double their net income, and probably in a best case scenario they can double it in 2027 too, and it will be awesome revenue growth rate and EPS growth rate like plus 80% in 1 year. It is definitely awesome. If we are talking about humanoid robots, actually you can buy really not useful one, Unitary R1, and maybe you saw how they danced on a China New Year. And actually it is everything what they can do. Next we have Unity G1 humanoid robot. They actually can do some stuff. They can work on a warehouse. They can do something like this. And actually it is like 35 kilograms. And it can work like for 2 hours. Some leaders and other stuff in it. From my point of view, it will be super hard to buy something like direct by a company that produce robots because the valuations are insane. Here you can see UB Tech Robotics, ticker 9880. And you can see revenue 1.5 and price to sales, not income, 25. It is super high. Shenzhen Dobot, the same $370 million in Hong Kong dollars. Second half of 2025 in revenue, and you can see 28 in price to sales. Absolutely insane valuations, but you will see something really interesting after a few slides. And then we have more like a warehouse robots, Geek Plus company. They are profitable, and you can see like over 10 in price to sales. Horizon Robotics, $2.4 billion dollars in revenue, and it is like 20 in price to sales. Shanghai Microport Medbot, competition for intuitive surgical, I think, but on a like super small scale. Close to 600 million Hong Kong dollars by revenue in 2025, and it is 35 billion Hong Kong dollars in market cap. You can just calculate that it is like 70 or 60 with something by price to sales. Guangdong Huyan Robotics, 300 million dollars in Hong Kong dollars, and it is over 30 by price to sales. Plus some Agibot, Galaxy General, and valuations are quite close. 6600 One Robotics, Shenzhen, 25 price to sales. Then we have some United States companies. First it is RRX, Regal Rex Nord Corporation. You can see that they actually making money, and it is awesome. And maybe we have to research this company a little bit deeper, because I think they are not actually making robots. It is not the main niche for this company. Next we have Faraday Future Intelligent Electric, but nothing interesting, just $73 million in market cap, super slow. Mobile Eye, it is a subsidiary for some huge company like Google or something like this. Again, nothing interesting, $6 billion valuation. Plus, Honeywell International actually making some stuff in humanoid robotics niche. I will definitely research what actually they are doing. I think it can be interesting because Honeywell looks like they are not overvalued. They are on a regular price right now. And if you are watching this YouTube stream, write down your thoughts in the comment section down below. I will try to answer or any questions. Then we have some pre-IPO like Aptronic, Boston Dynamics, Figure AI, Agility Robotics, Sanctuary AI, 1X Technologies, and you can see that we have like lead investors like OpenAI, Nvidia, Hyundai Motor. It is quite interesting, and actually Hyundai Motor actually bought Boston Dynamics, and Boston Dynamics it is quite better robots, so they are not like $20,000. They are close to 300,000, and actually they can do really interesting stuff. If we are talking about ETFs, if you don't want to pick stocks, maybe it is a good idea to buy some ETF, and no, it is definitely not a normal opinion. We have human, coit, bot, and actually you can see here a holdings for HUMN. It is Tesla 8%, UBT 6.5, and actually we watched UBT evaluation, it was like 20 by price to sales, unrealistic. Xpeng and Xpeng not profitable company for 4.6%, NVIDIA Corporation 4.5%. And next one, Rainbow Robotics. Rainbow Robotics, it is insane company from Korea with $900,000 in net income by 2025, and they have valuation over $8 billion. I will show you on the next slides. Then we have Shenzhen Dabot. Actually, we checked them too. Harmony Drive Systems, Teradyne, Hyundai Glorious, and other companies like Qualcomm. And actually, you can see for Rainbow Robotics, price to earning ratio 8,424. Price to sales ratio 350. Maybe they're doing something really interesting, but I don't think so. You can see here numbers in Korean won. Here you can see the humanoid robot, Hubo. I think it is not really something special. Then they have a dog like another companies, and some robo arms. Why they are evaluated with 8,000 price to earnings? It is absolutely insane for me. And I think I have more slides about robots. I need some time actually to find them. Yeah. I think if you want to bet on robots, maybe you can buy some companies actually which produce some small stuff for robots. First one, it is Sunny Optical Technology 2382. Actually, they are doing lots of stuff related to optical, like cameras for humanoid robots. And actually, you can see that now we have the same numbers by revenue and net income, but in 2021, it is somewhere here. It cost $240. Now it is 61 Hong Kong dollars. Definitely, I think this valuation is absolutely okay, and actually, I'm holding this company for like not a huge amount of money, but anyway, I think we have upside like to 80, like quick upside. Everything is growing, revenue growing, gross profit growing, profit for the year attributed to owners of the company growing. Here you can see some products that achieved mass production, ultra low high solutions by ultra technology with quad cut lens, everything with a lens and other stuff. Then actually they're writing that if you are building a car, you will probably add a LiDAR to your car, and they are making lens for LiDARs again. It is some sort of a like future venue for Sunny Optical. Then they have another stuff like for portable devices, for robots, and even for some optical instruments, but it is like 1% of their revenue. Uh, like the other companies, they have AI platform actually to reduce spendings. Next one, they're making cameras actually for phones, and maybe you use some of them because Sunny Optical they got contracts for Apple, and probably in 1 year you will have a lens for your camera made by Sunny Optical, and from my point of view it is awesome. Everything growing in vehicle production, and maybe you missed it, but in China they have AI toys, AI pets, AI education, and all of this stuff have a camera in it, and it is awesome because you need to produce actually more some optical lens and other stuff. Here you can see smart hardware, they call it, and AI toys. It is just like in the beginning, 47, 69, 238 million units. Definitely they will just get some share of all of this. And here you can see like the numbers about humanoid robots, and in 2025 it was produced like 20,000 humanoid robots. In this year it will be close to 50, and with this amount of growth, probably we will reach like over $1 million or 1,000,000 units produced in 2035. Elon Musk actually saying that it will be much faster, but it is so-so because we can like produce a lot of stupid robots, and they are not really interesting. They can just dance, or maybe we can produce some awesome robots that actually can replace you on some sort of a heart facility. They can lift like 50 kilograms or something like this. Definitely they will need some stuff, and also if we are talking about humanoid robots, you will need some joints. Also you can bet on this stuff via I need a moment to find a ticker. 1882. It is a Haitian International. Here you can see. Yes. The model, and it is like for price to sales 20 by price to earnings 33 billion Hong Kong dollars in market valuation, and they have like 85% of China market in press systems, and people use their machines actually to produce parts for joints via for humanoid robots. Here you can see how it looks like, big machines to actually some sort of a printing. plastic processing. Yeah, this is how they call it. They're working all over the world. They have like smart machines and a little bit easier one, and it is absolutely awesome company. Here you can see injection molding. Yeah, this is how they call it. Actually, you just get these machines and you can produce any kind of stuff, plastic stuff, from needles to like anything. And they own like 50% of overseas market, not just China one. From my point of view, they will just crush everything, and right now we have like plus 50% upside, and actually now company with a 10% grow rate by revenue and close to 20% net income. It is just 9.5 by price to earnings. It is not none. It is so strange. In the United States, the same company will cost like 30 price to earning. And probably you can buy AAC Technologies Holdings. It is you can see here futures. You actually can buy futures for the company. 2018, yeah, ticker. Model just for 2.1 price to sales, 25 price to earnings, $45 billion valuation, and actually they produce a lot of stuff in 4 niches. You can just Google them by yourself. Like acoustic products, electromagnetic drivers, and precision mechanics, and optic products too, plus some MEMS components. The main thing that I really like that they can produce like things to reduce heat from some stuff, and probably you will if you want to like make a good humanoid robot, you will buy some stuff from AAC Tech. Or maybe you will just lose some money here. No one knows. And I think it is everything what I would like to tell you about humanoid robots. Again, now I think I will just research like or quick research some companies from their valuation by from highest to lowest, like on other streams, and it is Regal Rexnord Corporation. Revenue falling from 6.25 to 5.93, not stable income, and actually factory automation subsystems, industrial powertrain solutions, automation and mechanical power transmission components, electric motors and electronic controls, armoring products, and it looks like some part of the business related to robotics. maybe it can be interesting. I don't actually research this stuff, but it is quite easy right now. You can just use Gemini, like tell me about RX, Regal RX Not Corporation, and you will understand what actually they're doing on a good level. I think it is not really interesting to evaluate it like a normal company, because I think it will be overvalued. If we will check Regal RX Nord on Guru Focus, it is just 7% growth rate, 6.1, 6.8, 7.2 billion dollars. But future revenue growth rate will be a little, not revenue, EPS growth rate will be a little higher. Maybe they will reach like 15% in margin, or maybe no. It is quite hard to predict. Plus they have like over 4.4 billion dollars in debt, and it is not really nice. And you can see that stockholders' equity are not growing really fast, plus this dilution minus 66%. It will be really hard to buy it. Industrial powertrain solutions, automation, motion control 28%, and power efficiency solutions 27%. I think I just will pass it. And significantly overvalued, it is absolutely what I think about this stock. I need like 2 minutes to actually scrap tickers for you. And I'm doing it on a Finviz, just S&P 500 index. Then we have market capitalization from highest to lowest. And I think I'm on a page like 7. I know that I can be in a random place if I'm not doing it in one day, but it is just a lazy way to research United States companies. And we will talk about Synopsys, Quanta Services, ServiceNow, FedEx, Waste Management, Boston Scientific, Bank of New York Mellon, Cadence Design Systems, Cummins, don't know this one, Specialty Industrial Machinery, United Parcel Service, KKR, Intercontinental Exchange, Carvana, PNC, Williams, Freeport McMoran, Airbnb, Johnson Controls International PSC, US Bancorp, and General Dynamic Corp. It is quite interesting that some of this stuff related to our team. Again, I think it will be awesome. I just checked the comments that they are working, and it looks like everything is okay. First ticker, it is SNPS, Synopsys, Software Infrastructure. Oof. First quarter of 2026 quite not normal. Net income just 2.7%, and previously it was like 20%, and I think it is a huge problem for them, because we will see a drawdown on a red line, and it means that it is not possible for them to have like normal valuation. I think it will be like super overpriced. Yeah, and that is what I think, that this red line on a 300 mark, and the price on a 500 mark. In a theory, they will just meet somewhere in the future. And if we will see another drawdown in revenue, it will be somewhere here. If they will recover, definitely it will be on highs. I think Synopsis not really interesting right now, because it is not with a discount. Previously you can see here stagnation for like 2 years or close to 2 years. I will check what actually analysts think about this company, but on the first look it is not interesting. Future revenue growth rate 18. Net margin 13. With this amount of revenue growth rate, it can be interesting, but it is quite hard to buy them now, with price turning 77 right now. Maybe if we will check price to sales, we will see something interesting, but the median was like 12 for 10 years. In 2020 it was like 6. Again, I think it is not interesting, and you can just pass it, or you have to like understand it super deep to buy something like this. Next one, it is Quanta Service Engineering and Construction, PWR. Maybe my videos can be a little bit boring, but I just want to buy something on a normal valuations. I will just wait, and it is not actually a problem for me. Here you can see Quanta Services, and fair price from my point of view, something like 285. Now it is 600. Net income lower than 5%, and it is a huge red sign not to buy it. But they're growing like for 20%. With 20% growth rate and maybe 10% margin, it will be okay to buy like for 20, maybe to 30. Price turning now it is 90. Quanta Service. Engage in the provision of comprehensive infrastructure solutions to the electric power, oil and gas communication, pipeline and energy industries. It operates through the following segments: electric power, renewable energy, and underground and infrastructure. Definitely they are on a hype for that AI companies or AI spendings, AI capex will grow, and they will generate money on it. But from my point of view, it is just a bullshit, and probably you will lose money if you buy it right now. but maybe I'm wrong. And actually, if you have like 80% of S&P 500 and they are overvalued, it means that probably we will see a huge drawdown. From a Guru Focus view, it is significantly overvalued, but definitely they will grow a little bit faster. And even if we are talking about 2030, and analysts will write about all of their predictions, it will be like $20 by EPS. Yeah? And it will be price earning 30. But now it is not 2030, we have like 4 years. And by this theory, they can just be in a flat for 4 years, and that will be absolutely normal for this stock. And now we have service now. And it is quite interesting stock. I researched it again because of this software apocalypse. They are like minus 62%. $92 billion valuation and revenue only 13. Not cheap stock, even after this drawdown for like minus 60%. 17, 22, I don't know, 50. I think previously it was a little bit overvalued. Now it is like normal valuation. If I will just make not 17, I will just put it like 7. And you can see like with this valuation we have like fair price, and maybe it is okay to buy it here. Definitely analysts will tell you that everything will be okay in this company. But I just don't really think that like after 5 years they wouldn't be disrupted. Maybe it can be easy fail like on a long run. But with future revenue growth rate close to 20% and the same margin, maybe a little bit over 10%, they will feel absolutely okay, and we will see like $30 billion in 2030, and EPS will be 5. 5 EPS, it is lower than 20, like 18 in 4 years. Maybe it is a little bit better than a previous company, and maybe you can buy it. But again, if you watch my previous streams, I'm holding into it, and I hope everything will be okay with into it, because from my point of view it is a little bit better. Here we have a better upside, but with better upside you can make like huge drawdowns. But again, if you know something, or you are super deep in this company, you can see that now we have like absolutely nuts numbers by volume, and it can like predict the lows. Yeah, you can see that here we have much better volumes like here, and it is interesting. Maybe we are super close to bottom. Next one, FedEx Corp, FTX. 0.72, price to sales, profit margin 3.4, and 15.75 price to earnings, and actually it works really nice. Now we have this spike in share price, but I don't see the same spike for earnings. And again, I think that you can make some money on puts here, because I don't really understand why this company costs like 20. Previously it was cheaper, and absolutely nothing happened in money. That is why you can just, not a financial advice, but you can think about put options, and previously I thought about them somewhere here, and actually we saw a really nice drawdown for 11%. Maybe we'll see a better push down to like -20, -30%. I don't believe in these valuations. It is not normal. Now we have waste management, utility company on the highs, and average price to earnings 32. Is it okay for company with grow rate like 7%? And I think it margin lower than 10%. Okay, now it is like 10.7%. You can see that actually it is quite good with these lines and the share price. Maybe it was a little bit cheaper in 2019, but now we have these valuations, and you can see that we don't have any discount. Maybe you can wait like for 15% discount and buy it. It will be something like 190. Boston Scientific Corp. It is quite interesting that we have like minus 45% in medical devices. Definitely it is better to analyze it a little bit deeper, not like just buy and hope. Average numbers quite good, like 6, 10 and 55. 55 it is definitely not normal, but here you can see that they grow their net margin from 5, 8 to 15, and now it is 25, and we have this drawdown. Actually, I will write down Boston Scientific to future research list, because now we have like price where you can buy it, or maybe it is like minus 5% more, but it is not like super high from buy zone. Research. I need one moment actually to add this beautiful stock to my research stock list, and you can see BSX, and I will research it right now like 62, and I will write down like research it right now. BS6. Boston Scientific Corp. Analysts predict 8% growth rate. Previously, it was like 15, and maybe this is why we can see this huge drawdown from 100 to like 62. Because they slowed down, and what will be with net margin will be on the same levels, like close to 20, with close to 10% and 20% margin. I think 4 and 25 it is like okay, and maybe we just buying it on a normal valuation, but first quarter is awesome. 25, 4.6, 5.2. Definitely it is interesting to research, because we have like plus 11% growth rate year over year, 20%, and if they will have like 20% margin, they can easily come back. Maybe they have some lawsuits, but we will check it a little bit later. Now we have like a not super deep research. If I will find something interesting and I will buy it, probably I will make a like separate video or separate stream for Boston Scientific Corporation. Now it is not interesting, or interesting, but I'm not holding it, and that is why it is not interesting for me, because why it is important that we have this huge spike by price to earnings. In theory, they can like grow not to regular prices by price to sales. They can grow higher to like plus 100%, and it is net stuff. It's definitely interesting. Next one, Bank of New York Mellon, BK. Actually, if you are trading some foreign stocks, probably you are using Bank of New York Mellon custodian, or maybe no. Here you can see that price quite good or sticky to this red line, and now we have a little bit overvalued, but actually I really like Bank of New York Mellon, because they always have like 27% net income. It is awesome. Maybe we can check here price to book. Just to understand it a little bit better, significant overvalued, and it looks like analysts don't believe in a high amount of revenue. Growth rate is just 5, it is super low, and price to earnings in yellow, it is not really good, and price to book on a red zone. It is quite strange. 2.3 and the median 1.1. It is better from my point of view to buy somewhere close to 1, and you can see that actually you were able to buy it for 0.7 in the 2020 crisis or COVID crisis. I really don't want to buy something like for 2. It is really huge amount of money. Now we have Cadence design systems, and like 15 years ago I actually worked in their stuff that they produce, and I think it is just called the same, Cadence design, or just Cadence. Everybody use it to make like everything related to production for electronics. I think Nvidia use them, or everybody use them. Now we have a little bit overvalued, and it is definitely not a good time to buy. Plus they add some AI stuff into their design systems. But if I will see something like 220, actually it is interesting for me to buy it and research them again. Maybe if we will see 220, I will research them again. 56 minutes. Maybe I will just make it a little bit quicker for the next companies. Industrial machinery on a highs. They are not growing. Margin just 8%. It is quite strange. It is super overvalued from my point of view. Maybe if they will make a lot of money in the future, but it is just easier to come back in the future. No, it is not real. It will be interesting for me even to write it down if we will see like a revenue grow rate by analysts like over 20%. And we can see 7 now. And not possible to buy from my point of view. Next we have UPS. And UPS it is quite interesting because FedEx on a highs and UPS actually losing money, and 1.22, 6.2, 18.8, and negative growth rate. Actually, UPS falling for 5 years. Do you want to buy something that actually can't boost the revenue for 5 years? I think no, it is definitely not interesting. Now we have like upside, technical upside, but if you see something like this, you have to understand why actually they can come back to growing, because if they will just on the same levels, all of this stuff like this strategy wouldn't work. Because now you just create United Partial Service as some sort of a bond or coupon. You're just getting 6%, and it is not interesting for me. KKR and Core. It is some sort of an investment company, I think. Investment firm. It offers alternative asset management. And they are not actually feeling good because of private credit problems. And we can see something like a flag here. Maybe we can buy it somewhere close to 28. I don't think that it is okay to weight them by this method, but I will try. 5 price to sales, 50 price to earnings, fair value. But I think they have like a huge leverage. Probably they will lose some money right now. And after it, you can see a super nice growth from 100 to like maybe 300 in several years. Maybe they're doing something interesting, but you have to research them deeply. They have money. It is interesting. But you can see that actually your stockholders' equity growing, and it is interesting. Okay. Some strange numbers. You have to research this stock, because on the first look it is like strange. You can just I can just tell something about them because it's not really simple. Next one, ICE, Intercontinental Exchange. Спасибо. 12% growth rate for the last year. 7.51, 10.69, 29 by price to earnings, and we have fair price, and you just don't need to do anything with a fair price. Maybe you can write down it to with a like research again at 120. I will do it. ICE 120. It's quite simple work. You just don't need to do it like complicated. Next one, Carvana. I think it will be super close to. Oh. And actually, they are not losing money like in 2020. 1.7, 11, and 43. 43, it is definitely not normal for them, and I think they're close to normal valuation. Yeah? Maybe a little bit overvalued. I don't think that we have some sort of a super close trend to grow in car sales. Maybe I will come back here like in 2 years or something like this. But it's quite interesting that actually people were able to buy it and make 52x. It is awesome. PNC Financial Service Group. Financial service, average price to sales 2.7 and 11 price to earnings. It is a bank, and actually price to earnings quite good in this company. You can see that earnings, what people really want from banks, and it is overvalued, not interesting. Williams Combs Energy, and I think it will be on a highs, and we can just skip it. Nothing interesting. It is not normal, or maybe actually they're growing, and we have like 20% net income. Okay, I will think a little bit more about them. 12 and 43. Yeah, 43, it is not normal. I think VMB. Operates as an energy infrastructure company which explores, produces, transports, sells, and processes natural gas and petroleum products. No. I just don't even want to research it. First of all, it is in a highs. Second, if everything will be okay in Iran, and it looks like Trump don't want to escalate anything, I can't like predict prices for natural gas. It's just not interesting on a long run. It is like for people who think that they can make money on cyclical companies. FCX, Freeport McMoran, perfect bet if you think that we have some sort of a shortage in copper. Again, overvalued, but I think it is not super high, or maybe 47%. Overvalued and not interesting. You can just pass it and wait for better prices. Airbnb. Airbnb. It is quite interesting that they showed us like 50% in margin, then after 2 years 20% in margin, and what the margin will be in the next years, probably not good. How to evaluate it, we don't know, and maybe they need to be a little bit more accurate with their net income, because from 50 to 20 and again to 50 looks not really good from my point of view. And actually, if you bought it, you're still losing money. The same levels like in 2021 with revenue $6 billion, and now we have the same share price, but actually they double their revenue to $12 billion and 2.5 billion in a net margin, and previously it was a total loss. I think I will research it because maybe it can be interesting. Actually, to travel a lot, people are just replaced by robots, humanoid robots, and everybody just chill out in the Airbnb. Maybe it is interesting, but we already have like 2 companies to research: Airbnb, BS6. What actually do you need from 1 hour stream? Just to throw you some good ideas, and if you like them, just write down something in the comment section down below. I will tell you that you are awesome. GSI, Johnson Control International, some stuff like equipment on the highs, and I think we can just pass it because it's from Ireland. They have some problems with net income. No, they don't have not growing, and 7% margin. I just pass something like this. USB, United States Bank of Bank Regional. they're quite good in net income, as you can see. 1134, and actually they're on a fair price. I can say something bad about them. Awesome company, and I think the same we will see in press to book. They will be like normal valuation, maybe a little bit higher than median. 5% growth rate, a little bit better by margin, and price to book. You can see that it is from like 1 to maybe 1.8. On the 10 years it was like 2. Now we have like 1.5. Median 1.5, the same. It is normal valuation, but not interesting without any discount. As you can see that technically you were able to buy it somewhere here with 35% to the earnings, and it is awesome. You have to wait just like 40 bucks. Yeah, 40 bucks and lower, and it will be a perfect buy. And the last one, GD, General Dynamics, super fast correction, minus 15%. It is quite a huge company from my point of view. 18.7. They're growing, but not really fast. Not quite good margin, 8%, not 10. And they are super stable from again my point of view. Definitely you have to buy something like this cheaper, maybe with price turning 10, or maybe just lower than 220. Normal valuations. Anyway, I think that it is the last one. Thank you for watching. Bye bye, and come back to this streams. See you later.